Well, I missed it. It just happened fast as fast can be. The 6:30 candle, at least my 6:30 candle, was flash just like that. I had that 2000 unit position sitting right here. And as I was just getting set up for the morning, zipped right through it, closed it out. So we made a little money on the scalper. So this 2000 unit position right here is no longer in play. That was a clean trade. Now we're just holding this short one of 4,787 units, and we're still kind of in the middle of our field goals here of a buy stop and a buy limit. All right, so the market took a pretty big move in the last probably 20 minutes, engulfed the whole bull flag. So we did pick up our stop order on the top. So now we have a balanced hedge. This is our position that we're looking for to continue. And we no longer are going to leave this buy limit in the market. He's no longer part of the game. So now we have a 4,787 unit position on the top and equal on the bottom with about 7,000 units sitting on the sidelines for something to do. So I think right now, based off this bull flag and where it's at, I don't really have a good indication of where it's going to go. So I'm just going to let this saute and let the market start to make some decisions. One thing that's kind of happening here is this handle has gone straight up. It's really on the move. Overall, the market is slightly overextended, in my humble opinion. Doesn't mean I'm right. I'm just saying it's slightly overextended. So at any time, this thing could turn over and roll. But I'm not confident enough to drop this long position. So this is going to be maybe new. Maybe you've never seen me do this. And that's probably one of the reasons why I'm making these videos, is to try and show you all my little weird nuances that I do. But I'm going to take and I'm going to put a stop loss about 5 pips above this position. Now it's pulling back. So this may actually work out good. I'm not going to put a take profit in. It's just going to be a stop loss. So now the idea behind that is, if this market turns around and flushes, I'll make about 5 pips on that trade, but I'll also drop my long position on the top side over the overextended market. That way, if it rolls back down and comes below, I'm not holding the long position. Now, if it comes down, takes that stop profit, and then continues on his way, we can always pick up the hedge again. And you're kind of like playing that top side. Is it going to go or is it going to flush? Right now, I think it's kind of a 50-50 ball. So that's why I'm running something like this. It would be nice if it ran for a while and we could kind of push this stop up. But I don't know. It really could roll over, and this gives you a little bit of protection of being caught holding a long position on the top side if it rolls over. All right, I went, popped in the shower, did my hair, came back. It had picked up the stop on that position right here and then flashed back up. So it was probably about 10 pips ago. So we made about 5 pips on the transaction, which is a little bit of a bummer that we didn't get a little bit more than that, actually. At least we picked up a few. Then it continued on its way. I think I'm going to let it just sit for a minute and see if it comes back down into this area. This line right here is where we sold it, where the stop was. All right, this market's just goofy because it doesn't know what it wants to do after a big run up. It's pretty normal, happens all the time. So this ran up, flagged, busted the top of the flag. We picked up a long position, ran it up, made like 4 or 5 pips, came back, hit our stop, and now is coming back down. It's below where we picked up our stop. I don't know if it's going to go up or down, but let's just talk about some potential rationale behind this deal. Here's really a very similar looking situation. Ran up, flagged, ran up, tailed, fell down, ran up, flagged, ran up, collapsed, tried to happen. The bulls tried to make it happen again, failed pretty hard, ran up, flagged, broke down, came back in, hit the resistance level, came down, hit the resistance level. I mean, really flagged and channeled, failed. Gave it another go, flagged, failed, ran up, flagged, ran up, flagged. Now we have a long tail. Is it going to fail again, or is it going to run up again and flag again? I don't know that we really know, but I feel like there's at least an opportunity that it could fail based off of all of these different hard fails. So that's the way the CAD kind of dances. So if you want to, two-step with the CAD, maybe it'll fail. Maybe I'm wrong. But that's why I'm a hedger, because I'm usually wrong. All right, it's that time again where we jump into the comment section. Kind of becoming one of my favorite parts about making these videos. Um, let's see, what do we got here? One guy wrote, "Didn't understand what's going on until I saw your video explaining trimming. This is genius." Well, thank you. Thank you very much. Probably need to practice a lot. I would emphasize a lot, like a lot. And there is a lot of intuition, subjective decision making is needed. I would probably argue that is trading in general. Everyone is going to see the market slightly different and make a decision based off really their risk tolerance. You might not even know what that is, but when you're uncomfortable, you'll know it. And when you're comfortable, you'll know it. So a lot of intuition there. Okay, Chad, what is the lowest medium unit you can open on Oanda? 1. You can trade 1 unit. Check this out. All right. This position right here has 4,787 units. I can go in here and I'm going to partially close 1. You ready for this? Boom. Now I have 4,786 units. 4786 on the calculator and nothing on the long side. So let's rebalance that. So now I'm holding a 4,786 unit position. You can literally trade 1 unit. All right, let's move on. What else do we got here? Sorry, man, I have not put up the new hedge calculator. There's the old calculator. It's basically the same formulas, and I figure you guys could adjust it, change it, do whatever you want. I've kind of tweaked mine just to make it look cool for the video, but ultimately the trimming is the same. Okay, this is a good question. I'm sorry if I'm asking a dumb question, but I don't get it. That's cool. Trading's tough, actually. At the beginning, we started with 2 $500 accounts, and now at the end, we have a 430 and a 540, so less than 1K. And you say that we made money, in quotation marks, after closing the position in the money. I know there are positions open, so net profit can change, but as far as now, I guess we didn't make anything. Am I wrong? I'm just trying to understand because I like this dynamic system without stop losses. Okay, it's a fair question. I do think it's worthwhile to read a guy's comment. One person wrote, "I think there's a profit. It is just like John Cena." What? Love it. Sounds weird, but notice that the equity and drawdown value adds up to more than starting balance. I think that's, for me, and this is money management system, that's the key. You're going to have open drawdown. It's not a hard loss until you close it. I'm taking losses and I'm trimming them and I'm offsetting them with profits. So the open loss is not a loss. Never has been. People buy stocks, mutual funds, whatever, all the time, and they come up and they go down and they fluctuate and they are not a loss. It's a position you're holding. It's an equitable position. You own that. There's no expiration date. We're not holding options. There's no deltas, alphas. They're not diminishing value because of time. You get to hold that position as long as you want to hold that position. This position right here of 4,786, now 86 instead of 7 units, I could literally hold that for the rest of my life. And I could wait for 20 years and that could be 10,000 pips in the money. Maybe not 10,000, but you get the point. it's not a loss until you close it. And I use profits to trim losses, and it becomes a little bit of a business, if you will. Early on, I used the analogy of buying a fast food restaurant. And you have brick and mortar, which is hard cost, which is the cost of the contracts. And in this scenario, the cost of 4,786 units is $95.72. That's my brick and mortar. That's hard money. I had to put that up to own that position. The open profit, this is operating capital. This is you're going to buy burgers and buns, and until you sell those, you're putting money out. It's a negative until you turn it into a positive. I've made positive money over here. I could turn and move $41.71 to this account, and I would essentially only be down $30 because I made 41 over here and I'm down 71 over here. So I'm slowly selling my buns and getting my money back, making money selling my buns. This $71, the negative 30 net, is not a loss. It's just a bun that I have not sold. Everybody's got to sell their buns. That's funny. All right. The last comment, which is hands down my favorite, one guy wrote, "Sir, complicated ... Can you use a hedging strategy?"